Good morning, this is Bloomberg Daybreak Europe. Happy Tuesday. I'm Tom McKenzie in London. These are the stories that set your agenda. You're fired. President Trump moves to oust Fed Governor Lisa Cook over mortgage fraud allegations. Cook fights back, refusing to resign and disputing the president's authority. Digital tax backlash. Trump threatens fresh tariffs and export restrictions on advanced technology, blaming digital services taxes, he says, discriminate against US tech giants. Plus, French Prime Minister Francois Bayrou calls a confidence vote that could topple his government as soon as next month. So from Fed cuts optimism to fears around Fed independence. That's the shift that we've seen in the last 24 hours with the scrutiny, of course, from President Trump on Lisa Cook. And we continue to monitor that story for you. European futures are lower after the sell-off, modest as it was yesterday, both in the US and Europe. And the sell-off continues today. European futures then pointing low by 0.6%. Here in the UK, the FTSE 100 pointing low by 35 points. S&P futures, after dropping about 0.4% by the end of the close yesterday, a little softer as well in the session today, pointing low by 7 points. Nasdaq 100 futures, as we build up, of course, Nvidia earnings at the end of the day tomorrow stateside, pointed low by just shy of 0.2%. Let's flip the board and have a look cross asset. You've seen more steep curvening, yield steepening, I should say, in terms of what's happening. The back end, the 10s and the 30s have been selling off. Yields are up on the front end. You've seen a bit of money moving into the front end when it comes to the US Treasury market. And so you are seeing that curve steepening again on expectations you get a cut in September, but concerns longer term about Fed independence. Benchmark 10-year currently at 4.30, with yields up close to 3 basis points. So again, you're seeing the selling pressure on the 10s and the 30s. The dollar sold off as well on the Lisa Cook news, so that has paired some of those losses. Euro dollar at 1.16, a little stronger then on that story. The euro versus the US dollar up 0.1%. Brent, $68 a barrel and 50 cents, currently down 0.4%. A focus from traders on the supply story when it comes to oil. And gold gaining 0.4. The yellow metal seeing a bit of a bid at $3,378 per troy ounce. So President Trump has moved to oust Fed Governor Lisa Cook following allegations that she falsified mortgage documents. But Cook is pushing back, saying she will not resign and the president has no authority to make her. Her lawyer says they will take whatever actions are needed to prevent the action from President Trump. News desk editor Balazs Pence joins us with the latest. Balazs, so we've had the response from Lisa Cook. She's put out the statement. What happens next?
Well, this has certainly been a pretty dramatic escalation of President Trump's campaign to exert more control over the Fed. The president really kicked it up a notch. Before, it was a pressure campaign, a war of words, and now he's taken action. Lisa Cook has pushed back pretty fiercely through her lawyer, telling us that she's not going to resign and she doesn't think the president has grounds to fire her. So now it looks likely that this is going to litigation, and the litigation will center on the question whether the president has been able to establish cause that he needs to fire sitting Fed board member. Now, how that is going to play out and whether Lisa Cook will be able to stay on the board and continue to do her job while the litigation plays out is an open question and will likely require a separate court decision. So a lot of questions over this story, not to mention the questions over the direction of Fed policy.
But what does it mean for Fed policy then, Balazs? Markets still pricing in a little over 80% chance of a September cut. But presumably, as we think about a president determined to reshape the Federal Reserve, we have to push forward and think about what happens in 2026.
That's exactly right. September seems to be taken as a done deal by markets, especially after Jackson Hole, although we still have a whole month of economic data to come in for the Fed to work through. But if Lisa Cook's departure creates another opening with one more member coming in, potentially nominated by Donald Trump, that could tilt the balance on the Fed board 4-3 on the more dovish side, which could totally reshape the direction of monetary policy in the United States. And that's what we're seeing in the market reaction. Today, the immediate reaction was more dollar softness. We've heard some voices emerging suggesting that there's concern building over over-easing in the U.S. So this will be a very closely watched development, and a lot of questions remain over the direction of rate policy in the U.S.
OK, Bloomberg News desk editor Balazs Pence, thank you for that important update in terms of the focus on Lisa Cook of the Fed, of course. The market reaction also central to the story, the dollar weakening and then the traditional haven assets advancing, like gold, as we mentioned, as President Trump made that move to oust Fed Governor Lisa Cook. For a closer look at the market reaction, let's bring in Ruth Carson, our senior reporter who covers FX and rates. Ruth, talk us through the moves. Specifically, we've seen in the dollar, we're seeing strength in the euro today. The dollar is a little softer, and part of this, if not all of it, is down to what we've been hearing in terms of Trump's attacks on Lisa Cook.
Absolutely. As soon as the headlines moved in the Asian early morning trading session, we saw the immediate reaction was to just sell the dollar across the board against the Aussie, Kiwi, Euro, Sterling, and of course, haven currencies, traditional havens like the yen and Swiss franc got incredibly decent bids. Now, this, if you take a bigger picture look at this situation, it does feed into investor jitters around Trump. His policies around trade, obviously perceived notions of attacks on Fed independence, and considering the dollar is the reserve currency of the world, it's on 80% of all FX trades in a $7.5 trillion a day market. The immediate reaction was to sell the most liquid US asset out there, which is the dollar.
And Ruth, another part of the asset space, of course, that you keep an eye on is what's happening in Treasuries. And we're seeing that in terms of yield curve steepening and quite pronounced now at the back end of that curve, with the 10s and 30s selling off, the front end seeing a bit of money moving in. What does that signal to you?
Yeah, it's very interesting to see that, the across-the-board selling of the dollar wasn't translated into rates. It was a lot more nuanced. We were seeing the front end, the two-year part of the curve, bid on expectations that, the Fed's going to cut. But then that concern around Fed independence, the concern around the fiscal and debt situation in the U.S. really weighed on the 30-year, the ultra-longs. And we definitely saw the selling in the Asian trading session, where rates investors went, if there is questions around Fed independence, I'm going to sell at the long end even more. And that has only, intensified as the European trading session comes on. So it'll be interesting to see how the US traders read the tea leaves, so to speak. But for now, definitely steepeners is the key trade that we're seeing.
OK, steepeners, the key trade. Ruth Carson, Bloomberg senior reporter, thank you for the market reaction to what we've been seeing, the latest, of course, around the Fed. And we'll continue to monitor that for you, Ruth, with the analysis. So, meanwhile, President Trump has been meeting with his South Korean counterpart. He's insisted that South Korea will stick to the terms of its recent tariff agreement, including hundreds of billions of dollars of investment in the US, despite lobbying efforts by President Lee Jae-myung of South Korea, of course, during their first in-person meeting at the White House. While the tariff deal remains unchanged, Lee expressed optimism for close cooperation on security and shipbuilding. Let's bring in our Seoul Bureau editor, Denny Thomas. Denny, what do you and the team make of this meeting then? Tariffs remain in place for South Korea, but the two presidents seem to get along at least.
Yeah, so I think that's a key takeaway from Seoul's perspective. There was a lot of apprehensions going into the meeting, how will this meeting pan out? And I think in the end, President Lee has been able to hold on to kind of a script that he was preparing for a long time. I think there were thorny issues such as the defense spending and the cost of hosting the American military here in Seoul. We don't know what happened behind the scenes, but at least publicly there has been no acrimony on those subjects, which gives an impression that the parties are willing to talk behind the scenes and iron out those differences. So overall, it's been a good outcome, and also there's been at least 3 or 4 major deals that the South Korean companies have announced after the summit meet. So that kind of plays into the whole argument that Trump has been making, that he needs more investment from some South Korean companies. So that has fallen through. So I think both of those, on those terms, there is kind of some agreement. I think the biggest takeaway was that President Lee has offered Trump a peacemaker role in bringing South and North Korea together, and that I think probably has played kind of a strategy that President Lee has adopted, trying to make Trump happy about that prospect. So that has been welcomed in a way, and Trump has responded saying that he would like to meet North Korean leader Kim Jong-un. And so that's where it ended. Now, behind the scenes, what we get on the farm sector and the military spending side is yet to be seen.
Yeah, and a big order, of course, for Boeing aircraft being announced by the South Koreans.
Yes.
And as you say, talking about North Korea and suggesting that President Trump could build Trump Towers in Pyongyang at some point. And there is a sticking point, though, or potential sticking point, Denny, which is around export controls, key technology, of course. This was a threat that came through from President Trump, not specifically targeting South Korea, but in terms of his concerns about digital taxes. Is South Korea immune to that threat, or is there a real concern in South Korea that they could be hit by these?
So, no, I think South Korea is aware of that, and this has been a pet peeve of President Trump for a long time, and he saw that it's a strategy that can win him success in the past, with Canada back down the last minute. So the timing of it is a bit conspicuous because it comes right after the meeting with President Lee. So even though he's not mentioned any country by name, I mean, it's a chance, it's a kind of a threat, and that to his allies that, look, if you don't play by the book here, there will be more tariffs coming in other shape and form. So we don't know whether it comes or not, but really the threat is out there and people are taking it seriously. And we have to wait and see how far South Korea goes in trying to negotiate that particular digital taxes.
OK, Bloomberg Seoul Bureau Editor Denny Thomas on that meeting. Denny, thank you for the context. Here's what else to think about today. 7:45 a.m. UK time. We're going to get French consumer confidence at a time, of course, when French assets are in focus and futures are pointing to a further sell-off of French government debt on concerns about a government collapse, potentially as soon as September the 8th. But we'll get a gauge on the health of the French consumer. That's at 7:45 a.m. UK time. At 1 p.m, we're going to bring you the Hungary rate decision. So that central bank coming through with its decision later today. And at 1:30 p.m. UK time, we get US durable goods orders. So that data point's interesting at a time when manufacturing is starting to show signs of softening in the US. So durable goods later today as well, which we will break for you. You can get a roundup of stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on the terminal. Of course, Lisa Cook and President Trump's attempts to fire the Fed governor in focus. Coming up, Israel lauds Lebanon's move to disarm Hezbollah, offering to draw down its remaining troops on Lebanese soil. We have the details for you next. This is Bloomberg.
Earnings season is here.
We're deep into earnings season.
A lot of earnings.
We are not short of earnings to bring you.
Bloomberg is first to break the numbers.
Barclays, Stellantis, and AstraZeneca.
Shell, Credit Agricole,
VW and Puma.
Earnings are coming in bang in line with estimates.
With the smartest insights.
We are trying to focus on what we can control.
Predictability, consistency in outlook is very important.
We are a European player.
Continuing coverage on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Now, Israel is praising the Lebanese government's push for Hezbollah's disarmament. Prime Minister Benjamin Netanyahu's office says it is prepared to scale back its forces if Beirut follows through. For more, I'm joined now by Bloomberg's Middle East correspondent and anchor, of course, Jemana Pasechi, joining us out of Dubai. Jemana, walk us through what Netanyahu is offering Lebanon at this point.
Let me give you the context first. On August the 7th, the Lebanese Council of Ministers took the unprecedented decision to disarm Hezbollah. This is on back of a U.S. proposal that called for the full disarmament. The cabinet decided to make that decision. They moved ahead with it, made that big announcement. And of course, one of the goals was to ensure that all of the weapons in the country would be held exclusively in the remit of the state. So that was a couple of weeks ago. And it was only yesterday that we then heard the response from the Israeli side, with the Israeli Prime Minister calling the decision out of the Lebanese government a, quote, momentous one, and then also adding that Israel would be willing to start withdrawing its own troops from southern Lebanon only if Lebanon follows through with the plan of disarmament. And of course, that caveat is very important because one of the terms of this ceasefire that was agreed to in December of last year was a full withdrawal of Israel from the southern part of the country. Israel still maintained a presence in 5 strategic outposts. Now, we've heard back from the Hezbollah acting chief, Naim Qassem, yesterday in a televised speech. He said that they will not disarm, and they have no plans to do so unless there is a full withdrawal of the Israel positions from the south. So herein lies a bit of a sequencing issue. Israel saying that they're supportive of the decision, but at the same time, Hezbollah leader saying that they're not planning on disarming. The Lebanese army plans to put forward a plan for how they plan on disarming Hezbollah by the end of this month. And it should be noted that all of this is going on with a lot of American pressure behind the scenes. Both U.S. envoys to the region, Tom Barrack and Morgan Ortagus, were in Israel yesterday. They're back in Beirut today to help push through. Certainly a lot of progress, but still the main question is, will the Lebanese government succeed at getting Hezbollah to fully disarm?
Yeah, the practicalities of disarming this group in focus as that pressure, as you say, politically continues from outside and domestically as well, it seems. Meanwhile, of course, Jumana, Israel striking a hospital in Gaza. The image is distressing, again, killing at least 20 people, including journalists and medical professionals. What do we know and what has been the reaction?
Another very tragic scene overnight, another hospital targeted, this time Nasser Hospital, not once, but twice. And the 2 attacks killed 20 people, amongst them rescue workers who were wearing visors, and also another 4 journalists as well, according to the latest reports. Now, the Israeli Prime Minister put out a statement saying that it was a tragic mishap, that is a quote, and that the military was investigating. But of course, he did not elaborate on the nature of the mistake. But it should be noted, per the Committee to Protect Journalists, that Israel has killed 189 Palestinian journalists during the course of the campaign in Gaza, and the UN say that more than 1,500 health workers have also been killed throughout the course of this war. President Trump was asked about it yesterday. He said, I'm not happy about it. I don't want to see it. But then he also added that there has to be a conclusive ending to Gaza in the coming weeks. And it wasn't clear whether he was referencing the fact that the latest Gaza City offensive needs to come to an end, or whether the ongoing war is going to come to an end, or whether they're still actually working behind the scenes to get that ceasefire across the line to secure the release of the remaining hostages. So all of that remains to be seen. But in the meantime, these offensives and the attacks on Gaza and Gaza City continue.
OK, Bloomberg's Jumana Pasechi in Dubai. Thank you for that update. Now, President Trump says Vladimir Putin's personal dislike of Ukraine's Volodymyr Zelensky is stalling a meeting between the 2 leaders. The White House has previously said it believed Putin agreed to a meeting with the Ukrainian president and that planning was underway. But the Kremlin never confirmed their commitment, and no summit has yet been scheduled.
That was not easy for him to go to Alaska, for him to come here. But the fact that he showed up on a very successful day, it was a very successful day for other things, because, we're also talking about missiles, nuclear. We're talking about a lot of different things. We're talking about limiting nuclear weapons. We'll get China into that.
Coming up, French Prime Minister Francois Bayrou calls a confidence vote in his government over plans for budget cuts and tax rises. We've heard this story before, haven't we? September the 8th could be crucial for this French government. French assets in focus. The details are next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, France Prime Minister Francois Bayrou has called a confidence vote over his budget proposals that could topple France's government next month. Yes, we're back to that story again. The move prompting a sell-off in French assets as investors hedged for more political uncertainty. 3 political parties immediately said they would vote against the motion. But Bayrou said the vote must take place as he tries to make cuts.
This is why I asked the President to reconvene Parliament in an extraordinary session on Monday, September 8th. I will engage the government's responsibility on that day with a general policy statement in accordance with our Constitution. This general policy speech will pose the central question, whether the danger to the nation is serious, whether there is an emergency or not, in order to choose a path to regain control of our public finances.
Let's bring in Bloomberg's Caroline Cornat in Paris, standing by for us. Caroline, explain for us then why the French Prime Minister is calling a vote of no confidence in his own government and what the chances currently are of success for him, for the Prime Minister, on September the 8th.
Tom, what Francois Bayrou is trying to do here is to anticipate the social anger in France against his budget and the opposition he was likely going to face in October when this budget was supposed to be debated. So for the entire summer, he repeated that he didn't take any summer vacations, instead trying to explain why he's trying to save 44 billion euros in the next 2026 budget. Why this is important, why, for example, every second the French debt increases by 5,000 euros. He even made little videos on the social networks, on Facebook, on YouTube, trying to talk directly to the French. But this doesn't really seem to have paid off. His popularity is extremely low, the lowest of any prime minister over the past few years. And really, the vast majority, 85% of the French, are totally opposed to his proposal of scrapping 2 French bank holidays in order to save 5 billion euros. So all this making it a very difficult September for Francois Bayrou. So rather than facing a general national strike in the streets on September 10, he's now calling for this vote of no confidence on September 8. Now, the chances of another government collapse in France are very high because already just minutes after his speech yesterday, the National Rally of Marine Le Pen, the far left of Jean-Luc Mélenchon, have both said they will not support Francois Bayrou. Now, the socialists were kind of the only tiny chance, but last night we heard on the 8 o'clock news from the first secretary of the Socialist Party who said in this current state of the budget, it is unthinkable that the socialists will support also this vote of confidence. However, the socialists have also said they will present an alternative budget over the next few days.
OK, so we'll watch the socialists, but certainly, Caroline, the markets have been waking up to this risk.
Yes, of course, the French uncertainty is going to weigh on the markets over the next few weeks again. We saw last night the CAC 40 reacted pretty badly, down 1.5% after the speech. And also, of course, huge pressure again on French bonds. The spread between the German and the French 10-year has increased to 75 basis points. It was around 90 basis points when his predecessor, Michel Barnier, collapsed last December. But clearly, French bonds haven't really recovered since President Macron called snap elections in July 2024, and the situation is not going to get any better until September 8.
OK, we will continue to watch French debt on the back of this story. Bloomberg's Caroline Cornat in Paris with that important update. Caroline, thank you. Coming up, Fed Governor Lisa Cook says she will not quit after President Trump moves to fire her. We'll dive deeper into the market implications of concerns about Fed independence as Lisa Cook pushes back. Stay with us. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. You're fired. President Trump moves to oust Fed Governor Lisa Cook over mortgage fraud allegations. Cook fights back, refusing to resign and disputing the president's authority. Digital tax backlash. Trump threatens fresh tariffs and export restrictions on advanced technology, blaming digital services taxes he says discriminate against US tech firms. Plus, French Prime Minister Francois Bayrou calls a confidence vote that could topple his government as soon as next month. So, French assets in focus on that story. Yields now higher on the benchmark 10-year over in France, higher than they are over in Greece and Portugal. We watch that story, of course, with the spread above German bunds widening as well. European futures pointing low by 0.5%. Here in the UK, FTSE 100 futures pointing low by 0.3. S&P futures a little softer as well after closing lower by 0.4% yesterday. Nasdaq 100 futures also off by 27 points. Let's flip the board and have a look cross-asset. There's a lot of scrutiny right now on yield curve steepening in the US, with money moving into the front end, 2 years a bid. Yields are down on that portion of the curve, but at the back end, the 10-year, you can see, and the 30-year, the sell-off is there on concerns about what the Lisa Cook story tells us about Fed independence risks. 4.30 right now on the US benchmark 10-year, with the yields up close to 3 basis points. The dollar is under a bit of pressure as well. Euro bid at 116 versus the greenback. Brent at $68 a barrel, down 0.5%. And gold getting a bit of a lift, up 0.2%. So let's get to that story. President Trump moving to fire Fed Governor Lisa Cook in an escalation of his attack on the central bank. Cook has disputed Trump's authority and is refusing to quit. Let's bring in Venram, cross-asset strategist for our Markets Live team. Ven, what could Cook's firing mean if that's what happens? And certainly that is the desire of the president. What could it mean for Treasuries then?
Morning, Tom. What it means for Treasuries is unequivocally one thing, which is a steeper curve. Now, and specifically bull steepening, where the short end of the curve outperforms the long end. Why is that going to happen? Because if Trump has his way and Cook is eventually fired, then what it means is that, you know, the Fed has control of the short end of the curve with the Fed presumably cutting rates faster than the economy would allow them to, or inflation would allow them to. So they have some control over the front end of the curve, and that will keep the 2-year anchored. However, the more you cut rates in the face of, in the face of faster inflation, i.e., we have seen core prices hovering around 265, 275 this year. And as long as that situation continues, the Fed can't go too much lower on rates. But if they do, that is a warning for the long end, and that will keep the yield curve steeper, much steeper in the months to come. So the White House can have control of the Fed. They can have control of the short-term interest rates, but not the long end.
Ven, how does that view then and that analysis tie in to your forecasts for the US dollar? We can talk about the here and now, and then we can push out further, because right now there's a bit of softness in the dollar. Does the Lisa Cook story change your views on how the dollar performs in the months ahead?
Well, I think what is happening with the dollar has been a very interesting dynamic in the past couple of weeks or so, Tom. So what we have seen is that, where earlier the markets were thinking that the dollar is going broke, there's a run on the dollar. Now there's a run to hedge the dollar, and that is the big difference. And I think that, what my modeling shows is that, if you pass the real interest rate differentials among the key constituents that make up the dollar index, the DXY is not trading too far below where it is mandated by those rates. And that suggests that the narrowing of that inflation differential suggests that the risk premium on the dollar is abating, and that I should expect that to continue so long as the 30-year Treasury yield stays around 5%.
OK, well, we'll watch the 30-year yield on that 5% level. Are US stocks relatively immune to this story, Ven, or is there a read across there as well?
Well, there is nothing stopping U.S. Treasuries and the U.S. exceptionalism story when it comes to U.S. stocks, at least. I mean, if you look at the S&P, it's trading about 25% above my fair value model. And if you look at the Nasdaq, it's trading with even more of a froth. But in a world where Magnificent Seven and NVIDIA are the big story drivers, and we're getting the NVIDIA results this week, that is likely, I mean, it's hard to say when that castle of cards will come crashing down, but, you know, the more the froth there is, the sooner there is going to be a Minsky moment in the markets where markets are thinking, look, we have overpaid for those earnings and the estimates are too rosy, and at what point that will happen is hard to tell, but it may happen sooner rather than later.
Ben Ram, cross-asset strategist for Bloomberg MLive. Ben, thank you. To the trade story now, because the EU, of course, finally agreed a trade deal with the US in late July, under which most European products sold into the US will be subject to a 15% tariff. The rate has given some European businesses a sense of predictability, at least on the edges, but there are, of course, still many challenges. Let's get more with Bloomberg's Charlotte Hughes-Morgan in Amsterdam. We were reminded of these challenges, of course, with Trump's threat around digital services taxes and how he may respond to that. Charlotte, what is the mood? You've been speaking to European companies. Are they feeling a sense of relief? Do they have the certainty now on the back of this deal?
That's right, Tom. Well, I would say there is a sense of relief. I would say it's more gloomy resignation. I mean, obviously, you know, these tariff negotiations are out of the hands of these businesses. It's not within their control, and yet it has a huge impact on their supply chains, on their businesses, on their kind of capacity for growth and further investment. I mean, so many of these European businesses, and we went, you know, around Europe we talked to an artificial turf maker, we talked to the owner, an owner of a large private forest in Sweden that exports timber and pulp. We talked to medicine makers in Germany, a real range, and they all say, you know, this is causing us huge amounts of headaches in terms of our day-to-day decision making. You know, there's hard decisions to be made on pricing, there's long-term decisions to be made on where to invest, but you know, the back and forth on tariffs up until July the 15th has really kind of caused a lot of, you know, a big headache, a lot of problems for these businesses. And now we have this sense of certainty. You know, we know that it's 15%, but then, as you mentioned, you know, even today with the digital service tax, you know, this kind of potential threat of retaliation here, there's still lingering uncertainty and there's still caution among these business leaders. And for a lot of them, the US is a really important market and their supply chains are very complex. So they really need that long-term visibility, that long-term certainty to be able to make, you know, the right decisions for their business.
Well, until they get that certainty, Charlotte, what is your sense in terms of how some of these businesses are adapting to the here and now?
I mean, it really depends, and it's you know, every business is different. Every business is approaching it through a different lens. I mean, take, for example, you know, a maker of medical supplies in Germany have decided to double down on their US investments. You know, they're going to divert a lot of time and money to the US, which is, you know, essentially what Trump has been aiming for with these tariffs. But that comes at the cost of, you know, that money could have been spent on innovation or on growing certain elements of their business. So there's that kind of decision to be made. Others, like Tenkate in the Netherlands, which produces kind of artificial turf for stadiums, I mean, they are saying we can't move some elements of our production to the US. The cost would be too high. The knowledge base we need is in the Netherlands to make these kind of particular products. But I think what they're looking at is pricing. You know, they say we have a real kind of laser focus on pricing. How much of the tariff cost can we pass on to our customers in the US? You know, 75% of their sales come from the US, and how much can we absorb and continue to function as a business? So those are the kind of decisions that these businesses have been grappling with. And again, the broader caution, the broader uncertainty that's crept into the markets, some of their customers reining in spending, which we've seen, you know, across industries, that is also something they're trying to kind of grapple with and come to terms with and mitigate the effect of. So there's a lot for these companies in Europe to be thinking about, and I think if we have a lot of companies reining in certain elements of investment in growth, investment in innovation, well, that could be quite difficult for Europe.
Sure. I mean, there's a macroeconomic impact to this as well, isn't there? Bloomberg's Charlotte Hughes-Morgan in Amsterdam. Smart reporting in terms of some of the complexities around the trade dynamics as they continue to shift between the EU and the US. Meanwhile, President Trump says the US has more leverage over China on trade than the other way around. He cited airplane parts as a key item Washington has to counter Beijing's restrictions on rare earths. Meanwhile, the Wall Street Journal reports a senior Chinese trade negotiator is heading to Washington this week for what could be the first round of negotiations in the US Capitol. The report comes as both sides extend their pause on higher tariffs through to early November. Let's switch focus now and turn to the credit markets. Spreads may be seeing record tightness and priced to perfection. That may be the view from some at least. But could credit market investors be a little bit too complacent about potential risks? For more, let's bring in Mahesh Bimlagan, who is Global Head of Credit Strategy at Bloomberg Intelligence, for a deep dive on this. Mahesh, what are you seeing then in the credit markets? Because spreads are tight, and a lot of the guests that we've been speaking to have talked about a lack of concern about the credit markets, but you're seeing some signs potentially of fragility.
Credit has been the new safe haven. Let's start with that. So yes, we've hit like post 2007 tights in Europe. We've hit like 30-year tights in the US. I mean, Asia trades even tighter than us. Yes, spreads are tight. Spreads are rich. But there is a reason. Why? Because of all the uncertainty that you're facing in the government bond market and with what various governments are facing nowadays, increasing deficits. Yeah, like you can see the chart on the screen. It proves the point that credit has been 3 times less volatile than rates. 3 times on average, and depending on where you're looking at, sometimes even 4 times less volatile in terms of return volatility.
So what is behind, what underpins that performance?
As I say, the fundamentals have been holding up through tariffs, by the way. We were wondering, like, okay, credit has done very well fundamentally, not valuations, in 2024. We were worried about what is the consequences of the Liberation Day and all the tariffs that Trump has put in. Earnings have been okay. Credit ratios held very well. Companies are not borrowing to the hilt like what governments are doing, right? I mean, think about it. Would you lend to a company which makes a loss every year and makes even more of a loss year after year? That's governments. Yeah. While in credit, nobody is going to lend to such a company, right?
And the balance sheets are looking relatively healthy.
They're holding up very well through tariffs for now.
So the balance sheet's holding up. What are you seeing in terms of demand for this asset class then, and flows? How's that story adjusted?
Right. So this, the fact that it has been a safe haven and less volatile asset class has led to pretty significant flows. Yes, the Liberation Month we had some outflows, but after that it's been rampant. Like every month we are seeing like 2.5% inflow, even into the riskiest portions of credit.
Are you seeing any red flags around this? Are there any cracks?
I think crack is too strong a word. Yeah. But credit markets tend to be very good at pricing in downside because we are obsessed with downside, right? Unlike equities. So spreads may not be pricing in downside. But if you look at the second order measures, so one of my favorite measures is dispersions. So are names trading together or are they trading separate, right? Dispersions have gone up. So there is increasing the differentiation between credits. So very growth sensitive credits, commodity sensitive credits, I mean, given what is going on in terms of, Russia, Ukraine and so on, low oil. So differentiation has gone up, and as a result, measured dispersion has gone up. Credit volatility, implied volatility, just like stock options, that has also gone up a little bit. So starting to worry a little bit, but no cracks.
Starting to worry a little bit, no cracks. I mean, some of the covenants, have been relatively generous, haven't they, in recent years? And the definition, of course, of a default when it comes to private credit is, well, given some latitude, isn't it? I mean, there are rollovers, there's extensions of terms, and quite a lot of forbearance that in other asset classes wouldn't be there. How should we be thinking about that reality as well?
Now, I think you made a very good point. So what has happened is the really dodgy issuers are not able to issue in the public markets. If they manage to do, by the way, covenants are more or less non-existent. The leverage loan market is 95% non-covenant, covenant light as they call it. Means no maintenance covenants. Incurrence covenants, of course, are there. But all these dodgy credits are flowing into private credit because, one, they're able to place in 1 or 2 tranches to 1 or 2 investors. So the next canary in the coal mine, if at all, in credit markets, is in private credit. Public credit defaults are very, very low. You'll be shocked, like 2%. My published view for the second half of this year is under 2% default rate.
OK, so we watch the private credit markets for the canary in the coal mine. Really smart analysis, Mahesh. Thank you very much indeed. Mahesh Birmalingam, Global Head of Credit Strategy from Bloomberg Intelligence. You can read his analysis, of course, on the Bloomberg terminal. Coming up, bad weather and poor harvests drive a rise in UK food inflation at shops and supermarkets. We'll scan all the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So UK grocery prices edging up in August as bad weather and poor harvest exacerbated the strain of higher operating costs hitting supermarkets. The British Retail Consortium says food inflation rose to 4.2% from a year earlier, the highest level since early 2024. Joining me now is Charles Allen, Global Retail Research Analyst at Bloomberg Intelligence. Let's start with these figures and then we'll move on to the supermarket strategies as they face these higher costs. Charles, what do you make from the 4.2% and what it tells us about the challenges around the UK food market?
Well, I think the first thing to say is consumers really notice food price inflation. They buy food every week, and so you really notice when it's going up. 4.2% is actually the lowest figure compared to some others we saw last week. And in one or two reads, we're now seeing food price inflation above wage inflation. And so that's really beginning to make people think about what else they can spend money on.
How is this then impacting supermarkets' strategy in light of these higher costs and the national insurance contributions?
Well, obviously the supermarket wages are going up, but what it is you've got to be really sharp on your value proposition. And we're seeing that in a number of ways. Aldi price matches have been around for a long time. Suppliers are funding promotions, so we're seeing a lot of money off schemes usually linked to loyalty, like Tesco Club Card or something like that. We're seeing the discounters, Aldi and Lidl, doing well again. Their market share is above 19%, which is pretty much a record level.
Is that combined, the two of those discounted supermarkets, taking almost 20% of market share?
Yes.
What is this doing to the value of supermarkets? Is that where the value accrues? It's in the lower end of the supermarket basket that the cut price retailers and Waitrose takes a hit, or how dispersed is this?
It's sort of more complicated than that because actually the people who seem to be taking the biggest hit is eating out. And so World Panel had some figures about how frequency of eating out has gone down quite a lot. So what that means is that when people do go to supermarkets, at least some of the time, they're prepared to splash out on a taste the difference meal or something like that, because that's less than eating out. So you're shifting things around. So it's not only the value ranges that do well. It can be the more expensive ranges, but that's a step down from something else.
Okay, the shift to in-home dining, but maybe on some higher quality, or at least pricier, ingredients. Charles Allen, Global Retail Research Analyst for Bloomberg Intelligence, on that print around food prices here in the UK, and that, of course, remains a challenge for the Bank of England and the Chancellor, but also how the supermarket industry is adjusting to that as well, with all the nuance. Charles, thank you. Now to some other stories making the news this Tuesday. Elon Musk suing Apple and OpenAI, accusing the two companies of thwarting competition from other chatbot makers, seeking billions of dollars in damages. The lawsuit argues Apple's decision to integrate OpenAI into the iPhone's operating system inhibits rivalry and AI innovation, as well as harming consumers by depriving them of choice. OpenAI says the move is consistent with Musk's, quote, ongoing pattern of harassment. The case sets up a high-stakes showdown between the richest person on the planet and one of the world's most valuable companies. The Pinault family has reached out to potential buyers for Puma after the sportswear maker lost half its value over the past year. Sources say bidders include China's Anta Sports and Li-Ning, along with US firms and Middle Eastern funds. Puma shares closed up 15% in Frankfurt, their biggest gain in more than 2 decades. And the Trump administration is working to halt development of an offshore wind project planned near Maryland. The Interior Department plans to move to remand and vacate a permit granted to the project, which was approved by the Biden administration in 2024. It is the latest escalation in the president's war on wind power. It comes after work on an 80% complete offshore wind farm being constructed by Denmark's Ørsted was halted on Friday, which saw the company's shares plummet yesterday. There's a lot more coming up. Stay with us. This is Bloomberg.
I would say economically with China now getting much better. They have to give us magnets. If they don't give us magnets, then we have to charge them 200% tariff or something, you know. But we're not going to have a problem, I don't think, with that. It'll take us probably a year to have them. We're heavy into the world of magnets.
OK, President Trump talking about some of the trade dynamics between the US and China as a key Chinese negotiator on trade is reportedly heading to Washington this week. To what's happening in France right now, because I want to draw your attention to the political risk in France on news of this no confidence vote that will be, of course, held on September the 8th. And as things stand, looks like there's a decent chance that this French government could collapse on the back of that. This, as things stand, of course, given what we've heard from the far right and the far left of French politics saying that they would not support this government when it comes to that vote on September the 8th. So the risk premium is there. It's being priced in. It's starting to be priced in now into the sovereign debt of France. You've seen that spread between the sovereign debt of France on the 10-year OATs versus the German Bunds widening to 75 basis points, a 5 basis point increase yesterday. So just watch that story as that evolves. It's worth noting that the 10-year sovereign debt of France in terms of yields now higher than that of Greece or Portugal. Let's flip the board and have a look at Bitcoin. This is another story to draw to your attention. Reports that Bitcoin whale sold around $2.7 billion worth of the cryptocurrency on Monday. That may be one of the factors led to a bit of downside. Down about 11% since April, still up about 16% year to date. It's back below its 100-day moving average. Bitcoin back below its 100-day moving average, though it's worth noting that our team are pointing out that there has been long-running support at that $100,000 level. You briefly cost $109,000 for Bitcoin. It is back below its 100-day moving average, or it crossed below its 100-day moving average. But again, there could be support at that $100,000 per coin level. Some ETF flows as well could be part of the mix there. Continue to watch crypto on that. The opening trade is up next, walking you through all the trade developments, of course, and the focus on President Trump attempting to fire Lisa Cook at the Fed. The market implications for that. It's all coming up. Stay with us. This is Bloomberg.